It's Tuesday the 5th of May. I'm going to start doing some regular videos for my followers who are not subscribers but who ask me to look at markets that I don't normally cover. So I'm going to try and do this at least once a week. So yesterday on Twitter I asked for some markets to look at. I got a good response, so here we go. Well, actually the DAX I'm going to start with the DAX because someone asked me to do the DAX and I already do this. Now the stock markets for me have become quite confusing, I think, for a lot of people, because basically the whole debate at the moment is clearly the economies are in a dreadful state, unemployment and everything else. But of course the stock markets have actually been performing very strongly, as you can see, for about the last 6 weeks. And that is down to central bank action, which you have to say is very successful, because of course the stock markets have done phenomenally well. So it's a struggle for me too, because mentally, fundamentally, I'm thinking to myself, these stock markets surely cannot sustain this bounce. But then on the other hand, the Fed is just throwing tens of trillions of dollars at financial markets, and you do wonder, well, it will be tens of trillions of dollars by the time they're finished, and you do wonder if they can actually fight reality by just artificially supporting stock prices with an endless wall of money. Well, they are at the moment. Now, the DAX is quite confusing. We were trading within this channel, and of course we broke up. Now, to me, this was very bullish, especially if we got through the 50% fib, and I was looking for a break above 11,092 to then fill the gap down at 11,417, and I know I wasn't the only person looking for that. We only got as far as 11,337, so we didn't quite close the gap, and then we got this big negative candle, which I think was on Thursday, which indicated to me that the rally was over and we should see further losses. Now, we saw further losses, but on Monday all we did was test the low of this trend line, and now we're testing the high of this trend line. So for me, it's very difficult to figure out what the next scenario is, but obviously these trend lines are now working now that we're back within them. So around 10,650 on the downside, and around 10,000, should we call it 350? 10,400 down to 10,350. They are the clear levels that you want to be scalping if you think that we're going to hold within this channel, and it's worth a try, because right now there isn't really anything else that I can see. And of course, if we break back up, especially if we break through these lows of these two candles, which is around 10,750, then that should be short-term positive. And who knows, maybe we can retest this high up at 11,337, and then above there we've got the gap to fill at 11,417, and that will be key resistance. Now, the only other time frame that I can see making any sense whatsoever, I've looked at the weekly chart, and that doesn't give me much indication of anything. The 4-hour chart isn't telling me much either, actually. It's the hourly chart that looks like it's giving me, some sort of indication of, well, some decent trading levels anyway. I think trying to judge direction or have a punt on where we'll be in 1 week's time, I think is almost pointless, for the reasons that I described at the beginning of this video. So we've got good 23.6% fib support around 10,600, 10,550, which ties in with what I'm seeing on the daily chart. Back up here, we've got actually the 100-hour, so that's the 200-hour moving average, the red line. 100-hour moving average is coming in at around 10,770, and that comes in quite close to this little low down here at 10,756. So the gap, hang on. That's the gap from the Thursday low just before the bank holiday. So this is a very small gap, and you don't really see it on the daily chart, which is why you have to look at the hourly chart. So this is immediate resistance, 10,000, let's call it 10,750 up to 10,800. So if you're just trading short term, I think those are the two parameters that you want to look at today. Buying down here around 10,600, 550, selling up here around 10,750, 800, with a break higher, looking for those other levels. Okay, I've been asked to look at the euro versus the Aussie. Tricky one, this one. Clearly we are in a bull trend. There's absolutely no question about that when you look at the chart for the last 3.5 years. But of course, more recently the price has collapsed, which is adding to a little bit of confusion. Now, these are the trend lines which I think are the important ones for obvious reasons. And this one here, which is around 168, well, call it 169.00. 168.90 is holding. What have we got on the weekly? This is the weekly chart. The weekly low we got around 168.68. This is 168.66. So 169.00 down to 168.60 is where we can place this trend line. We have got this spike low. Now there is good support down here at 163.10. well, down to the 100-week moving average at 160.90, 190. So 163.00, 162.00. If we were to fall that far, looks like a good support level on the weekly chart. But this isn't really giving me any further information, so I'm going to quickly move on to the daily chart now, which is a little bit more interesting. Still difficult purely because of such dramatic moves, so to isolate levels that are worth trading or trying to pick a direction is tricky. But the important factors here are the 200-day moving average has done a perfect job of holding that dramatic collapse that we saw. So that was down at 165.36. We've had a good recovery since then. Now, I don't know why we topped here. I can't see any good reason, not from the price action or anything else. But when you join these 2 points, we have potentially, and this is only potentially, so I'm jumping the gun here, but this is what could develop. This could be an inverse head and shoulders. We could have a very small left shoulder here. This is the head. And then if we hold the 100-day moving average, which is around 168.22, maybe we can build a little right shoulder and then break above the neckline, which is at around 171.70. That would complete the small inverse head and shoulders, and we could push up higher. Now, we've obviously got fairly decent resistance at around the 173.05.15 level from a confluence of fibs, but also the price action backs that up nicely, of course. We start getting up through 173.50. That's going to look much more positive, and we can be running up to the mid 175 area. And then I would suggest that these 38.2 and 61.8 fibs around the 177.80, 178.00 area would support the price action in indicating that this will be a strong resistance level. One thing I do like to do is, once I've broken things down with the fibs, I like to see whether the price action matches the 61.8 and also the 38.2, and then if I can, if it looks appropriate, I will put some Fibonacci levels in there too, just to give me some sort of targets, not necessarily entry points, but targets within those ranges if I have positions on, and then that tends to work quite well. So you could even throw one on there just to give yourself some more little targets in between. So obviously, if we do start moving below 165.00, that would be negative on the daily chart at least. Okay, the euro versus the New Zealand dollar was one I was asked for. Now, this is the weekly chart, and this is actually giving me quite a lot of information. A bull trend with a really big 2-year consolidation period, and then we broke up, of course, and we've come back down to meet this trend line, the trend line going back to November, or the last quarter anyway, of 2018. So nearly 2.5 years old, nearly a year and a half old, this trend line. Now that held, we bounced just above it. In fact, these Fibonacci levels look quite good. 178, call it 178.90, 178.60. That has held 1, 2, 3, 4 weeks, disregarding this spike low, but for 4 weeks this level's held, so that's obviously important, and we're coming back down to test that now. And you can see even on the way up, this level held, so the Fibonacci level's tying in nicely, even quite tying in nicely with this swing high up here from 2018. So I think we should see if the market respects that level again on the downside. Would be worth trying a long position down below 178.00. What's the high here? Yeah, well, down below 178.00, we want to be out of any longs, and we're looking to retest the low down here at 176.56 with further trendline support down at 175.71. So watch that area for support. And clearly we've got resistance around this 50% fib around the 178, 182.70, 80 area. That also tying in quite nicely with swing lows here. So I would stick to the weekly chart. Now, these are all swing trade opportunities because they're obviously quite wide parameters. But the daily chart isn't giving me much information at all. So if you want to copy these levels, they're very easy to copy and put down on your own charts. Again, 186.50, 186.70 looks like a good resistance level, and there's this trend line just above here. So you'd want your stop above that trend line, which goes back to the end of 2017, joining that end of 2018 peak as well. I'm going to move quickly on to the next pair because I'm trying to get as much done in 15 minutes as I can. Oh no, I'm not. I'm quickly going to show you the hourly chart. This is the only other time period that made any sense to me for this chart. And when you put your fibs on here, on your very short-term hourly chart, these are working quite nicely and tying in with 100-hour blue and 200-hour red trend moving average lines. So if you did want to scalp this and not quite do the swing trades that are being suggested on the weekly chart, then the 50% fib around 179.40 tying in really nicely, 179.50.40, good support level, it's working. A bounce takes us back up to 180.00, 180.10. Now look at the 500-hour moving average. That is also playing a very significant role. So if you were looking to short, maybe you want to short around sort of 180.20, 180.30 actually, just above this 38.2% fib, and then you can have a stop above some of these spike lows, 180.50, yeah, maybe 180.60, give it 30 pips. A break above there would be more positive. Obviously, we start breaking down below 179.20, should we say? I think a 20 pip stop would be sufficient on any longs down here. Then we're going to be going quite a lot lower. British pound versus the New Zealand dollar, clearly in a bull trend for the last 3.5 years almost, and quite a distinctive bull trend. You'd have had trouble holding onto a long here, obviously, through 2019. However, we broke higher now. Volatile, consolidating again, but no reason to enter a short position, I don't think. Let me just check what's going on longer term. I don't think there's any reason to enter a short position at this stage. Just let me throw some fibs on here. That would give me confirmation. Yeah, no, nothing there at this stage to indicate that I should be selling anything, I don't think. Let's just stick with that bull trend, which is well established for the last 3.5 years or so, and look at those levels. So, where was I? That's where I was. Okay, we've got some very good support around, which is really working, around the 204.20 area. Ties in nicely with previous price action. So watch that area, 204.20 area. We break lower. We've got this spike low down at 202.76, but that doesn't look like a particularly strong support level to me. So we've got some really nice support around 200.50, 200.10. And that's quite simple because you just need to stop below 198.90 if you're putting on a swing trade there. And you can see how these candle wicks, these long spikes, have tested that area already, and it's held. So there's no, so we would want to be trying longs down there. I think now that's a long way away. So if we get there, send me a message and I'll have a look at that again. But I quite like the way this. The fibs have broken down quite nicely with the price action. And then you can see we are basically in this upper channel, which is volatile to say the least, but I would need to put a trend line on here in case we did break higher. You'll want to put that on your own chart from the end of 2018 to the peak of 2020, and then you've got a nice, if I take that off it's a bit more obvious, you've got a nice sort of parallel channel to be trading on the weekly chart. The daily chart doesn't tell me much, so I will go straight on to the Canadian dollar versus the Swiss, which was requested yesterday. Now, no prizes for guessing what the dominant trend is when we look at the monthly chart for the Canadian dollar versus the Swiss franc. We are clearly in a very, very bearish trend. So, Canadian dollar collapsing over the last 20 years. Let's just zoom in a wee bit to the weekly chart, and really, this is all that you need to know. This channel, which has been the one to watch since the beginning of 2017. So that traded nicely within that channel, and you could have put some sub trend lines in there, but we don't need to now because the fact is we've broken down again, and we have, once we broke through that trend line, that lower trend line, wow, big collapse. So let's just hold on 1 second. Right, the daily chart is really less helpful because the levels are, certainly the fib levels are not being respected, but I would guess this is a bear flag because we're obviously in a very bearish trend longer term, and that to me looks like a bear flag. So I think this is what you want to be trading now. Trade the bear flag. Eventually we will probably break lower, of course, because we are in that bear trend. So put this on your chart. Put your fibs on going back to October 2019. It's kind of respecting them, not the way I'd like to, but but the market is at least respecting these trend lines going back over a month and a half. So I would just trade that channel if I were you. Support down at 68.50, 68.40. Ride the bounce. If you're lucky, you might get up to the sort of 69.90, 70.00 area, and then you've got resistance at 70.05. And bearing in mind we're in a bear trend, you would want to be selling it up there. Now, as time goes on, by the time you get maybe up here in the middle of May, you've also got that trend line which I showed you on the weekly chart, that going all the way back, that triangle pattern. So that's going to be a really strong resistance level around the middle of May if we get up there to sort of 70.80, 71.00. Maybe we actually will run through for another 3 weeks or so, test that, come down and break the lower trend line on the next test. Maybe that would give us the momentum to do that, but of course I'm just guessing. In my attempt to race through all the markets and get everything covered that was requested, I haven't left myself much time to tell you about what I do, but my website is daytradeideas.co.uk. Please pay a visit and contact me if I